Steve, welcome to Zebec Network's Future of Money interview series, where we interview thought leaders in the payments, blockchain, and Web3 space. Thank you for hopping on today.
All right, thanks for having me. Good to see you again.
For all of our listeners, Steve is the CEO and founder of FT Partners, a leading fintech bank for M&A and capital raise. Steve, please introduce yourself.
Yeah, thanks, Parth. Yeah, so just for those of you who haven't heard of FT Partners, this is Steve McLaughlin here, founder of FT Partners, Financial Technology Partners. I started my career in banking at Goldman Sachs during the dot-com boom and bust, so I was there for quite a bit of years. Ended up running their fintech practice and then left in '02 to start FT Partners in San Francisco. So it's been 20 plus years running FT Partners. We're now 250 people around the world, cover pretty much everything across fintech, including, like you said, payments and crypto, blockchain, and lots of other stuff. And, we're now doing transactions on pretty much every major continent on the globe. We have live transactions on right now in the billion plus or minus range, sometimes much more. And so it's been a pleasure running the company. We got an amazing team and looking forward to the grilling today. Let's do it.
Awesome. So let's jump right in. As you said, FT Partners is a leader in the payment space. So I'm sure you've seen a lot of the recent developments in this space. Can you discuss some of the M&A trends you're seeing in the payment space and what's the driving factor for those transactions?
It's funny, seeing or not seeing, I guess, is maybe the way to think about it, because there was a huge boom in payments M&A over the last 10 years preceding the market, kind of coming down the last 2 years. And you used to see like 5 or 6 or 10 companies, maybe 20, they were all active buyers, right? And it was the First Datas and Jack Henry's and Metamontes and all these firms and FIS and Global Payments and WorldPay and on and on and on, right? Lots and lots and lots of acquirers. And then what happened is they all ended up merging, right? And so then you have like really three $50 to $100 million players, in what people think of as like the traditional payment space. And I'd say there's been a lot of indigestion there, including having some of those companies spun out, like WorldPay. It got bought and then sort of burped back out again. I'm sure they will love that analogy. But then you've had a lot of brand new companies come up on the scene that really have been, M&A light, a Square, a Stripe, CloudWalk in Brazil, Checkout in Europe, folks like that again, in the traditional merchant acquiring world, haven't really done anything in terms of buying major companies other than, say, Square buying Afterpay, which is really not the best deal in the world. So I think in the current environment, you either have a lot of indigestion about what they've already bought. Stock prices are down. Look at PayPal crashed, Square's crashed. There's just been a lot less M&A lately. And so, what's really interesting is a lot of these companies that could be bought are just growing really fast. I mean, some of the underlying companies, like I said, like a CloudWalk or, a Freedom Pay or Banking Circle or Transformate. And there's just a lot of really great businesses doing B2B or B2C payments or SMB that are sort of off the radar screen. And with there being no IPO market, really not a big M&A market, you're seeing a lot of these companies just growing and growing and growing. And I think there's some lessons learned from the past of a lot of deals that sort of went well and didn't go well. I mean, there's a lot written right now about PayPal and all the acquisitions they made. And there's like a big jury out where they highly successful deals from Hyperwallet to Honey and a bunch of other stuff that they bought, iZettle. These are multi-billion-dollar deals that people looking back in history say, did that all make sense, right? Afterpay, Square, did that make sense? So I think it's just a lot of like, what really fits. And so you're seeing, I think, transactions happen where the buyer really sees a strong fit with the founders, sees a strong fit with the company, sees the synergies are there, and the price makes sense. So you're not seeing too many sort of nonsensical deals happen in terms of valuation or terms. So, to me, it's like a bit of a cool market right now for M&A.
So then I guess on the capital raise front, we've seen quite a few payments companies look to raise a large amount of capital. So I think recently I read Revolut, which was a client of yours in the past, is looking to raise again. Their valuation has gone from about 33 billion to about 40 billion. So like you said, I think they've sort of, I don't want to say trashed or canned the M&A, but seems like a lot of the recent trends in AI and digital technologies allowed them to grow at a faster pace than, say, inorganic growth, such as M&A.
Yeah, I mean, you said it. I was going to bring it up earlier, but, we were very close to Revolut guys and can't comment on the, current machinations of things. But we did raise $1.25 billion for them at 33 billion valuation, in 21 or so. And, you've seen all these charts about valuations from 21 coming way down. They're, one of the many exceptions that we work with where raise money and they're crushing it. They went from performing very well to extremely well And, they'll probably be by doing some really good things going forward. But, I would put them in, I was going to mention them around the payment space because they're doing a lot of stuff in payments. Their business started really with expats and, sort of foreign exchange payments business and getting a card out there in consumers' hands, much more of a card payment platform and FX platform at its early heart than it was a digital bank. And now we think of it as a digital financial super app, if you will. So that's one of the companies that I'm happy to go on record saying I think will be very, very big and successful company. But have they bought anyone along the way? Maybe some acqui-hires or whatever. But no, they're not going out buying companies, right? And so, look at Nubank in Brazil, they're 50 billion plus business, really haven't bought anything. Stripe, nothing material, right? Some of the best companies, they're just so religious about building everything themselves. And then you see a couple of them make these big mistakes with, Square buying Afterpay and, so it can hurt. So timing is everything sometimes though.
Completely agree. And I think we saw that during the pandemic, especially in 2021 when financing were at the highest we've ever seen. Moving on from the capital raise and M&A stuff, I guess more on the consumer side, how are you seeing like consumer behavior and payments change over the past few years, especially since the pandemic? I know we've seen digital payments on the rise. What are some of the other trends you've seen in terms of consumer behavior?
I think the biggest thing to hit consumer payments, in my opinion, has been Apple Pay, right? And I to some extent, Samsung Pay and Google, right? But like from 2012 to 2020, or until the minute that Apple Pay came out, all you ever heard about was someone was creating the digital wallet of the future, and how am I going to get all the consumers using my wallet? And it wasn't T-Mobile or Verizon saying they were going to do it. It was Walmart. If it wasn't Walmart, it was Target and a consortium of other firms. And, and it was PayPal, or it was, Square saying we're going to just give everyone a wallet and the consumer's going to go pay all these merchants. I mean, that was all like super hard to, or Venmo. I mean, none of that amounted to a hill of beans in terms of how consumers really pay at the physical point of sale and, soon to be more e-commerce. I mean, PayPal globally created a wallet platform and you can pay for things around the world using PayPal, but that's 20 something years old. But Apple Pay came in and just wiped the game out. I mean, like, I don't even leave the house with a wallet like 80% of the time anymore because every single place I go takes Apple Pay. And if not, tell them I'll send them a check the next day. I think that's been a big innovation. If you look more around the world, there's hundreds of payment methods. One of the things that's probably the next big evolution in payments is there's so many ways to pay and there's so many rewards you can get at the point of sale. There's so much data and information being collected on every person, every transaction. And there's eventually going to be a war for each and every consumer and each and every purchase you make. How can I make that at my web store, at my hotel, at my car rental, at my airline? This whole notion of connecting all the ecosystem, connecting all the devices, all the payment platforms, all the payment types, all the acquirers, and sucking all that data in and being able to absorb and use and understand that data to make the right decision how to communicate with your customers or future customers. That's where the world is going, and where you see Visa and MasterCard trying to say, we want to get to that piece of it, right? And companies that really, the only company that I know that's like has a shot at winning and all that stuff really is going to be like a Freedom Pay. Probably never heard of Freedom Pay, but it's like Philadelphia-based company that is effectively touching all that stuff I just mentioned and becoming the key company in that equation. If you think about, everyone thinks how big MasterCard and Visa are, but they kind of forget that out of the 85 basis points of every transaction, MasterCard and Visa are taking like 10 or 12 basis points. Well, what's happening to the other 270 basis points? Well, it's starting to get divvied up between the acquirers, the issuers, and the processors, and all that kind of stuff. And a piece on top of that is going to start going to these gateway data infrastructure layers that are going to become super valuable as they become the guts of the whole ecosystem that can actually make sense of what's going on. So I think you're going to see some of these companies that you've never heard of driving consumer payments, and consumer payments are going to be more about, hey, how do I drive someone to a store as opposed to just process a payment, right? How do I get them to be loyal? How do I get them to upsell or upgrade their purchases or recommend to a friend, things like that. And then you go more micro to say like a Bilt, where we raised a bunch of money for them earlier this year, and they're creating a closed ecosystem of every renter in the country could be in that system, and every home buyer, and even I'm sure someday mortgages and other stuff. And, how do you, use that closed universe to create rewards and incentive systems and things like that. So it's all about payments is becoming more about how do I drive the consumer behavior than just merely processing a payment. Processing a payment is like, so 2000, it's like 2025 and beyond, you're talking about loads of data, split second decisions on how to like divert someone's wallet to spend here versus there. And I think that's going to become the battle of the future, the data, the information, the connectivity, and the AI that sort of, relates to all that data.
I agree. I think what we've also seen now in the space is the companies are able to bundle a lot of services together and offer a way for consumers to not have to use various solutions are the ones that are winning the space. So being able to offer a multitude of things that a consumer would use, say if you go on Amazon and want to spend like use your Amazon credit card, you have options like Klarna, Affirm, they're like buy now, pay later options. You also have a credit card option, you have gift card options. There's just so many options for consumers to choose from and be able to bundle all those together is what's allowing like Amazon customers, for example, just only sell with Amazon. There's no need to go to Walmart online marketplace or any of these other marketplaces or e-commerce solutions, for example. So what we've seen is a lot of bundling of solutions where consumers don't have to feel the need to turn to other solutions when they don't get those at their convenience.
And then, you could take some of the things that we all say, like fintech is everywhere and every company's a fintech company. I mean, anybody that's not embedding payments in their software platform is behind the times, right? So there's this big payback world, this embedded software, embedded payments into software and sort of putting payments kind of everywhere so that the companies can actually make money off payments and the core software businesses that they have. So there's a lot of change for consumers. And I think that's going to create a lot of confusion and a lot of opportunity to kind of bring it all together, right? Because very much of it's, I'd say super fragmented in a lot of different ways.
No, I completely agree. So I guess given that we've had so much transformation and innovation in the payments industry, what do you think is a lagging innovation in the payment industry? What do you think consumers, like what's a service or an innovation that hasn't been innovated in the payments market yet?
Look, everyone's trying to do everything, right? And are you talking consumer again, or?
Yeah, consumer.
I mean, I think it's a bit behind the scenes, but I think the whole fraud space and identity is one that, tends to become a big sort of unsolved issue. I mean, if you want to throw in chargebacks in there as well, right? It's like the number of chargebacks and the cost and the weight of that on the industry. I mean, how many people are ordering stuff saying, I don't like it, they're charging it back, and there's false chargebacks. I mean, my God, with AI in the arms of some pretty smart fraudsters, it's going to become, a big problem. And the question is, are the retailers and the issuers and the banks fast enough to fight fire with fire, right? And so there's, folks out there that are able to kind of essentially completely fake even a live, like a human category. So are you a human? Are you live? Are you really blinking? Are you moving your head? I mean, that can all be done with AI, right? So if I just record this call, and then I could probably, if I knew what I was doing, I could probably fake your liveness. So on a real-time basis, the computer says, look right, blink, look left. It can do all that, right? And it's just pixels at the end of the day. The whole identity thing is going to be a huge issue over the course of time. We got hired by Sam Altman's WorldCoin to help them raise a bunch of capital, which we did do. It's all about AI taking over the world and everything on the internet being very hard to discern who and what is real and human and everything else. So it's an iris scanning and a blockchain token platform where it can solve mostly solve the identity problem on the internet or in the real world too over the course of, many years. So, there's just some really, really interesting, cool technologies that are starting for a huge problem. So you have to look at it completely different. And those guys have an amazing take on it. WorldCoin's one of our favorites.
No, great point. I think cybersecurity and just data protection going forward, given the rise of AI, is going to be one of the key or focal points for not just payments companies, but blockchain companies, anybody in fintech, actually any company in general, given that's the way the future is heading towards. Another issue we've seen, at least in the payment space, that's lagging is the cross-border payments and global remittance. We've seen Coinbase and some other large fintech companies turn to that market. So right now, consumers are faced with, say, you want to send $200 back home. They're faced with a 12% fee to be able to send $200 back home. So the process right now is very inefficient. It takes time. There's an intermediary like a Western Union, and the consumers don't get to send $200 back home. It ends up being $180 and some change. So what blockchain and Web3 and the decentralized physical infrastructure network for payments is allowing people to send money back home in an instant, low fee to no fee. And that's one of the objectives that Zebec actually is starting to tackle as well. So we've seen cross-border remittance as a focal point for, I think it has the largest amount of innovation pending in the space.
Yeah, how many trillions of dollars are sent, cross-border every year, but there's a huge opportunity there. And we talked to the likes of Ripple and others that are powering a lot of this behind the scenes and on the crypto side. But huge innovation there, huge opportunity, and not just in sort of like underbanked, but just sort of even global cross border or even, intercontinent, huge opportunity there.
So I guess to wrap this up, Steve, what makes FT Partners so successful and special in the M&A and capital raising space, and why do you charge such premium fees?
Oh man, I wish I had more time, but the quick answer is we are very much detailed in the weeds with our clients, right? And it takes a lot of extra experience, a lot of extra time, a lot of extra energy. And the network that we built of contacts around the world enables us to get transactions done that other people probably couldn't get done. There's nothing like thinking about a business and its 20-year plan and what could it be long term. I bring up these famous transactions that were not that well executed, like PayPal when it got sold to eBay for $1 billion something, it became a $100+ billion company, or MasterCard's IPO for $5 billion in 2000. The whole company was worth $5 billion, right? And now it's worth $500 billion. Some of these assets were massively undersold. And we tend to go in and help sellers, whether it's raising capital or selling the whole company, get the story completely right, get to the right people, and get the right outcome that they deserve. And that's kind of how we got the Revolut $33 billion. Prior round was $5 billion. We come in, we get 33. I think that may be worth a little bit more juice in the fees. So we do charge a little bit for premium, you folks out there, but as we say, Ferraris are more expensive than Buicks. So anyway, tongue in cheek there, but Part, thank you so much, man. This has been awesome. And hopefully we could do another one soon.
Yeah, absolutely. Thanks again, Steve, for hopping on.